All right, quick trade recap. That was an insane voice crack. Quick trade recap for this day. I took one trade. It was a short on NQ, and it was a win. Now, going into this day, I was leaning more bearish than bullish. I mean, I do recognize that on the bigger time frame, we were working out of this bullish 4 hour fair value gap here. So if you go to the 4 hours, you can see working out of this fair value gap. I also noticed that higher time frame order flow is also extremely bullish, and I noticed that we have buy side draws and liquidity here, but I'm still bearish temporarily going into the day because of essentially this right here. So at market open, as you can see, we've left this big bullish price leg from the previous day, and we need to rebalance this. And at market open, we are already down here, already beginning the rebalance here. And the biggest reason is, I mean, if you look left here, I mean, if we go to the 1 hour and look left, notice there are no fair value gaps right here, right? If we go to the 4 hour, there are still no fair value gaps. This is all balanced price action here. So if we, I mean, obviously I think that eventually we're going to be bullish towards these highs and towards the higher time frame draws up here. But if we're bullish, where are we going to reverse from? Where is the market going to bounce from? Some sort of PD array, right? So I don't expect us to just magically, you know, sell off a little bit and then just get bought up. We're going to go somewhere that's going to hold bullish and then we can go higher. Now, when I look at this chart, where's the only area that I could expect price to go? The 15-minute fair value gap, because this is the only area that has not been tapped yet. Like there's no, remember, there's no 1 hour fair value gap, there's no 4 hour fair value gap. This 15-minute fair value gap's already been mitigated. So where would I expect to see price go, even if we're bullish? Here to the 15-minute, and also obviously to equilibrium of this price leg. So if you mark out this price leg, as you can see, equilibrium is not far from the 15-minute fair value gap. So I'm bearish overall going into the day. Now at market open, we get an initial sell off. Nothing too crazy, but still nothing I'm really interested in here. So as you can see, market opens, quick little sell off, nothing here for me. Now, once we get this sell off and then I see a lack of displacement and we start to kind of get bought up here, then I actually mark out this 15-minute fair value gap here on NQ. I did the same on ES. Now, ES traded a little bit higher than NQ. ES almost took out these highs, but not quite, so we almost had a bigger time frame bearish SMT here. But point is, NQ trades higher, respects the 15-minute fair value gap, while also sweeping all of these internal buy side highs here. So we're having internal manipulation sweeping all of these highs. We are rebalancing to equilibrium of this price leg here, and we are mitigating the 15-minute fair value gap. So now I'm looking to see, okay, what's the reaction of the 15-minute fair value gap? Well, what is the reaction? A big, heavy sell-off. So the market dumps almost 100 points as a reaction from the 15-minute fair value gap. And at this point, I'm like, okay, I'm probably bearish here. I'd like to see a continuation towards this 15-minute fair value gap that I was talking about at the beginning of the recap. So what do I need to see though? I don't take trades just based off of 1 minute structure. I need to see at least a 5 minute fair value gap form in order for me to take a trade. So if we go to the 5 minute, as you can see, this is a 15-minute that ends up respecting. Reaction to the 15-minute is us selling off. Notice we also have a 5-minute change in the state here. So the series of up close candles here. What the heck, I'm tweaking. The series of up close candles here, it gives us a change in the state. And then we also open up this 5 minute fair value gap. So once we get that, I'm looking to see a reaction to the 5 minute fair value gap. Right. So as you can see, market rebalances. Now when we get this rebalance, ES ends up taking out this high. And at this point I was like really I loved this setup. Like I really liked this as soon as ES takes out this high because it was just dead obvious to me. Because I mean look how good ES looks here, guys. Like this is so clean. Let me kind of expand this a little bit. Look, so this is the high. This is the rebalance here. So while NQ is holding the 5 minute fair value gap bearish, ES is sweeping the high that was put in after market open. And then look at ES to the downside. I mean, this just looks so clean. Like ES comes up, sweeps all of these internal highs here. ES is taking out all of this liquidity, while at the same time ES has left generated sell side. And at the same time, NQ is not strong enough to take out buy side, so we put in a bearish SMT. Now I'm still not fully sold on this. I still need to see the reaction of this S&T. So what am I waiting for? I'm waiting for this 1 minute fair value gap to get ran. So as soon as the candle closes that runs this fair value gap, this is when I take my entry. So technically I didn't take it to all the way down here because this is the candle that actually closes below this. Notice this candle doesn't quite close. But I was expecting to see, like, since this was already so far down by the time I took my short, I had my stop all the way at the high, and then if we were going to get a rebalance to the inverse, I was going to add size and then trail my stop accordingly. But as you can see, we never got the rebalance. And on this trade, this low here, the low that gets put in as a result of the initial sell-off, this is your low-hanging fruit. So this is where you want to be taking profits, partials, or moving your stop to break even. Because I mean, this is where like the market's going. Like this is dead obvious that the market's going here. Once this fair value gap gets ran, like with context, obviously. So I mean, in the context of the SMT 15-minute fair value gap holds bearish, bigger time frame price leg needs to get rebalanced too. So remember, we are looking to rebalance this price leg here. We've got all of these generated sell side levels below, and we need to move towards the 15-minute fair value gap because the only logical place for the market to bounce from and go higher in this price leg is this 15-minute fair value gap. So we already know we're going here overall. So obviously, in order to get to this 15-minute fair value gap, first we must take out this low. So I mean, once this fair value gap gets ran here, it's so obvious to me that we're going here. So that is where my initial target was, and then I left runners to the 15-minute, and as you can see, very, very clean trade, goes straight down. And I can bring up the executions here. So yeah, as you can see, I kind of got not the best entry, but I mean, this is the only entry that actually followed my plan because I have to wait for the 5-minute to form. Once the 5-minute forms, I wait for the reaction of the 5-minute, and the reaction of the 5-minute is this 1 minute getting ran. So that's where I take my entry. Like I said, this is low hanging fruit. This is the obvious target, and then you can leave runners to the 15-minute. And notice the efficiency in price, how it shifts once the daily objective is taken. Because obviously it's very clear and obvious. This mitigating the 15-minute fair value gap is the daily objective. And look how much less efficiency the market has once this is taken. Because look, market opens. Initially, we have very, very clean price action. I mean, this is just textbook here. Market opens, we trade higher, manipulate into a 15-minute fair value gap. The 15-minute fair value gap holds bearish. We get a large sell-off. Now, obviously, when you get displacement equals a fair value gap, so you expect to see some sort of rebalance to the fair value gap. We get the rebalance, and then put in an SMT, and then the fair value gap holds bearish, which is the 5-minute, and then we continue the model lower. So this is all very fast, clean, efficient price action. But notice what happens once the daily objective is taken. The market, I mean, kind of shits the bed low key. I mean, we end up selling off more and like filling the rest of the 15-minute fair value gap. So this is like somewhat efficient, but this is still very choppy. I mean, obviously it's clear that we're going lower, but it's still chopping around. And then, I mean, after that, as you can see, this is just terrible price action. So that's just your sign. Like this is more a reminder to don't try to trade after the objective is taken. I mean, obviously identifying the daily objective takes experience. But I mean, going into this day, I was very confident that this was the objective and that we're going to get a move lower towards the 15-minute fair value gap, at least, maybe even towards these lows. Now, obviously, at this point, at 8:45 p.m., I don't think we're going to get a move towards these lows. But I mean, maybe we get like a rebalance tomorrow and then a sell-off. Who knows? We'll see. But overall, very clean trade, a very efficient trade. I mean, it just went straight towards the draw. There's literally no drawdown on this. As soon as this gets ran, take the entry, stop at the high, internal low gets taken, stop gets moved to break even. Like I said, I was planning on scaling into this if we did get a rebalance towards these fair value gaps, but obviously these both became breakaways and the market just sells straight off towards the objective. So very, very clean trade today.